Good day, ladies and gentlemen, and welcome to the Krishna Defence and Allied Industries Limited H2 FY23 and financial year ended 31st March 2023 conference call hosted by Hem Securities. As a reminder, all participant lines will be in the listen-only mode, and anyone who wishes to ask a question may enter star and one on their touchtone phone. To remove yourself from the queue, please enter star and two. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Asta Jain, Senior Research Analyst from Hem Securities. Thank you, and over to you, ma'am.
Thank you very much. Good evening, ladies and gentlemen. Thank you for joining Krishna Defence and Allied Industries Limited H2 FY23 and FY23 earnings conference call. Joining us on the call today are the senior members of the management team, Mr. Ankush Shah, Managing Director, and Mr. Piyush Patel, CFO of Krishna Defence and Allied Industries Limited. We will commence the call with the opening thoughts from the management, post which we will open the forum for Q&A session, where the management will be glad to respond to any queries that you may have. At this point, I would like to add that some of the statements made or discussed on the conference call may be forward-looking in nature, and the actual results may vary from forward-looking statements. I would now like to hand over the call to Mr. Ankush Shah to commence by sharing his thoughts on the performance and the progress made by the company. Thank you, and over to you, Ankush sir.
Thank you, Asta ma'am. Very good afternoon to all of you, and thank you for coming for the earnings update for FY23 and half-yearly FY23. Some of you already know about the company, but some don't. Even for the sake of repetition, I will just give a brief about the company. I am Ankush Shah, Managing Director of the company. I'm a production engineer from Father Agnew College, Bandra, and joined the company in June of 2000. The company was started in 1919 by my father, late Mr. Ashwin Shah, who was a double engineer, mechanical and electrical. We started as an engineering company manufacturing equipment for the dairy industry, which included products like milk cooling tanks, milking machines, stainless steel milk cans. We got into the defense business somewhere around 2008, where we took up the challenging job of indigenizing shipbuilding steel sections, which we call as bulbars, which are used as stiffeners for hull construction of warships. It is a very unique profile which ensures that the strength-to-weight ratio vis-a-vis normal steel angles or channel which are used as structure is 3 times. Due to its high strength-to-weight ratio, if these are used for construction of warships, you are able to reduce the weight of the ship considerably, and in place, we can add several stealth features like speed, taking additional ammunition and personnel on the ship. In fact, navies across the world use bulbars due to its high strength ratio. We were also given the Defense Technology Absorption Award in 2014 by Prime Minister Shri Narendra Modi for our development of these bulbars, as prior to our development, Indian Navy was importing these steel sections from Russia. We successfully supplied these bulbars to all the leading shipyards in the country, which build ships for the Indian Navy, which includes Mazagon Dock, Garden Reach at Kolkata, L&T, Cochin Shipyard Limited in Kochi, and Goa Shipyard Limited in Goa. In addition, we are also supplying low magnetic permeability steel ballast bricks, which are used for balancing of critical naval platforms, and we are also supplying high alloyed weld consumables, which is used for steel welding of critical naval platforms. With the huge warship procurement plan of the Indian Navy, we see ourselves brought to back some orders in the near future, which will add significantly to our revenues. We were always on the hunt to add new products that we could indigenize and supply to the defense forces. And we are glad to share that we have launched 2 new products. One of them is the space heating device developed in close consultation with DRDO. This product is used by the armed forces at high altitude places like Leh, Ladakh, and Siachen to keep the room warm in freezing temperatures and at extreme altitudes that they work at. Due to its unique design, it provides for complete combustion of fuel, thereby ensuring there is carbon monoxide emission. As we all know, carbon monoxide is a very poisonous and harmful gas. We have bagged an order worth about 64 crores for supply of this product. The other product that we did is special, armored steel special profiles, which is used by the army for the construction. Prior to our development, these profiles, armored steel profiles, were being imported by the ordnance factories. We plan to add 2 new products for the coming years. One of them is composite fireproof doors and hatches in collaboration with a foreign vendor, which could be used by the Indian Navy as a replacement to existing steel doors and hatches. We are working closely with the Indian Navy for development of SRGM ammunition. SRGM stands for Super Rapid Gun Mount, which is mounted on warships. There is a huge requirement from the Navy of this particular ammunition, and most of the requirements is currently met by imports. Keeping in mind the focus of the government on Atmanirbhar and indigenization and the positive indigenization list, the ban list that is there, we see lots of opportunities for us in the defense sector predominantly, where we have successfully developed products for the armed forces and have built good trust and reputation, and which increases our chances for newer opportunities by multifold. We as a company have set a target to grow our revenues at the rate of about 30 to 35% year on year for the next 3 years. This is in brief about me and the company. I hand over to our CFO, Mr. Piyush Patel. Over to you, Piyush bhai.
Thank you, Mr. Ankur. Good afternoon, ladies and gentlemen. To start with the financial highlights for FY23, total revenue of the company stood at rupees 636.53 million in FY23 as against rupees 499.19 million in FY22, a growth of 27.51%. The company reported EBITDA of rupees 88.50 million in FY23 as against rupees 66.32 million in FY22, a growth of 33.45%. On year-on-year basis, PAT of the company surged by 115.38% to rupees 52.96 million in FY23 as against rupees 24.59 million in FY22. And PAT margins have increased to 8.32% in FY23 versus 4.93% in FY22. Now, coming to the H2 FY23, total revenue of the company stood at rupees 441.05 million in H2 FY23 as against rupees 292.04 million in H2 FY22, a growth of 51.02%. The company reported EBITDA of rupees 56.28 million in H2 FY23 as against rupees 36.53 million in H2 FY22, a growth of 54.06%. PAT of the company surged by 195.36% to rupees 36.57 million in H2 FY23 as against rupees 12.38 million in H2 FY22. And PAT margins have increased to 8.29% in H2 FY23 as against 4.24% in H2 FY22. Once again, thank you all, and over to you, moderator.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. To remove yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from Dipen Vakil with Incred Equities. Please go ahead.
Thank you for the opportunity, sir, and congratulations on a great set of numbers. Sir, you mentioned about your products in bulbas and other products which otherwise import substituted and many other products. So I wanted to understand, do you have a monopoly in these products or the competition has now increased? And how do you see that going ahead? That would be my first question.
Right. Thank you very much. In terms of monopoly, no, we don't have a monopoly, but the Navy or the Armed Forces have a simple policy because these are all critical products and supply of them is very important for their further projects. We have one more competitor in most of the products that we have. So there are about two vendors for all the products that we mentioned. And because of this policy, we tend to get at least, we assume that we'll at least get 50% of whatever the requirement likely is to come through. Because they always split the order to ensure that they're not dependent on one vendor for the supply. And in terms of the new competition coming in, it is possible, yes, but the gestation period for approval registration is at least a 24 to 36 month process. So there could be, but maybe not in the near side for sure.
Thank you so much, sir. That is very encouraging. So my second question is on the positive indigenization list. Since you mentioned about it, so I wanted to understand if you have any new product portfolio coming up or from the new list or any expected orders from in the pipeline or anything that sort of.
Right. So as I mentioned in my opening remark, we are looking to do two new products. One of them is the composite fire doors and hatches, and other is the super rapid gun mount ammunition, which currently is being imported. Because they cannot put a ban on the product when the product is not yet indigenized. So once the indigenization takes place and once you're able to show some traction successful, then they will move on the ban list because they cannot simply ban a product which is not available.
Okay. So just a small follow-up. So how is the timeline for you in terms of the development of a new product from the time it is developed to it is certified by industry and maybe it comes to you back as a final contract?
Wow. Depending on the product to product, but anywhere from 12 months to 24 months. Because, once you make the product, it has to be certified by type testing, field testing, and then the order flow begins. So it is easily a 12 to 24 month period before we can actually start booking revenues for the product, sir.
Okay. Sir, thank you so much for answering my questions and very all the best for FY24.
Thank you. Appreciate, sir.
Thank you. Our next question comes from CA Varun Agarwal, an investor. Please go ahead.
Thank you for this opportunity. Congratulations, Ankur and team, for the wonderful set of results. These new products which we are developing, I just wanted to know the potential size of opportunity of these products. And are we the first ones to develop this, or there are already people who are manufacturing them in India?
I'll answer it in two parts that is there. What the addressable market is there. The addressable market is very large. I would not be able to put on numbers exactly for that because both products differ there. But if I have to give you in a holistic view, as we say, for the ammunition, the total market size, the requirement in the next few years, about 5 to 8 years, is going to be over 1,000 crores. That's what we understand. And for the composite door hatches, it could be anywhere from about 200 to 250 crores. That's what we anticipate. And currently, who's doing these products? Currently, in India, none is doing. No one is doing. We have the ordnance factory making the ammunition, but the Navy is looking to have another source because they are still looking to import right now. So that talks that they're looking at indigenization.
Okay. And how are we looking at our margin profile for the next couple of years?
We see improved trajectory on the margin front as we move forward too, because we are currently sitting at a large order book and the unit economics will come into place. We've spent a lot of money in R&D and capex building, which has already happened in the past few years. So we will see the benefits and fruits of it in the coming years as we speak. So there would be, we will see some positive revision in that.
So would that be maybe 100, 200 basis points, or even more than that is possible?
We expect in that range, sir.
Okay. And this order book as on March 23 is mentioned as 90 crore. Does this already include the 64 crore of space heating device?
No, sir, because that order came on the 9th of May, if my memory serves me correct. So that is in addition to the already orders that we had.
So as on date, can you share with us the order book size?
Yeah, it should be in the range of about 140 to 150 CR. I don't have the exact number, but it should, because we've executed parts of the pending order in the month of April and in May, but it should be in the range of 140, 150.
Okay. Thank you so much, and all the best for the coming quarter.
Thank you very much, sir.
Thank you. Ladies and gentlemen, a reminder, if you wish to ask a question, please press star, then 1. Our next question comes from Saurabh Ved with the Willy Office. Please go ahead.
Hi, sir. Thank you for this opportunity. Your numbers were really good, and congratulations on that. My question is to understand how the company's capacity operates. Are all the production lines easily interchangeable to manufacture all our products, say defense products like by-bar, high specialty, steel, the weld consumables, as well as the dairy equipment? I just wanted to understand how this operates.
Right. I picked up few words from the thing because your voice was a bit low. Nevertheless, I understood your question. So we have two separate factories in Gujarat, in Baroda. In one factory, we manufacture only the dairy equipment business. So that's a separate line for all the products that we have on the dairy segment. Coming on the defense front, we have separate lines for the bulb bars, for the weld consumables, and also for the ballast bricks. But there are some equipments which are common, like the heat treatment facilities, the furnaces. Some of them are common, but most of them are tailor-made and customized to suit what the naval requirement is there.
All right. Thank you. Thank you for your answer. Another question I have in continuation is, say, the new products that you're looking at, the FRGM and the composite fireproof doors and hatches. Will that utilize the same capacity, and what kind of capex would you look at if you convert these orders?
That would not, some of the facilities or the existing facilities could be used, but but that's not to a large extent. For both the products, we will have to build infrastructure and capacity to be able to cater to that. We will have to do capex. I wouldn't be able to put a number on it right now because we are still at the design and the development stage. Once we are more concrete in the numbers, I would share with the forum.
All right. Thank you so much, sir.
Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star, then 1. Our next question comes from Rajat Vora with Nuvama. Please go ahead. Rajat, your line is unmuted. You could please ask your question.
Mr. Shah, this is Rajat Vora from Nuvama. Can you hear me?
Yes, I can, sir.
Okay. So just wanted to understand the recent order book that you have won. I mean, you've got over the last 2-3 months itself, since the starting of the financial year. How much is going to be expended by this financial year, that is FY24? If you can just throw a light on that.
There would be some spillover to the next year, but we would be completing the major part of all the orders within this financial year. In terms of percentage, I'm looking at about close to 70% or execution within this year. That's our target plan.
Okay, so let's say if as of end of May or middle of the May, it was around 165 crore of total order book.
Right.
That means 90 crore was end of March, and 60-70 crores which have come from the last 2-3 months itself. So of that, say around 70%, we should assume that it should be executable this financial year.
Yes, that's the plan. But as these are complex products, there could be some variation in that number. So that's why I don't want to give you an absolute number. I'm giving you an approximate range that this is our plan. We wish to execute majority of the orders. We will do whatever is possible to ensure that we are executing the orders. But to give you an approximate number, we see about close to 70%.
Okay. And the next question is, let's say with the current capacity that you're having, and in your previous
question, there was some that the economies of scale would, happen, and then the more operating margins can, move up from there. I wanted to understand with the current capacity, how much of the order book or the total order execution that can happen without taking new additional lines or building up new capacity.
So for the current orders that we have, and if you have to do as per our plan about close to 70% within this financial year, we will not have to do any major capex. When I say major capex, for the factories of our size of 1.5 crore, 2 crore happens in terms of automation or whatever that you bring in. There would be some addition in terms of workforce that we'll have to do to cater, which is already started. So no major capex to service the orders, to execute the orders that we have right now.
Okay.
There would be some small capex in terms of small automation or lifting systems, but nothing major, no new factory setup or line setup, if that's what you wanted to ask, sir.
All right. Okay. Thank you, Mr. Shah.
Thank you, sir.
Thank you. A reminder, if you wish to ask a question, please press star, then 1. Ladies and gentlemen, if you wish to ask a question to the management, please press star, then 1. As there are no further questions, I now hand the conference over to Ms. Asta Jain for closing comments.
Thank you. On behalf of Hem Securities Limited, I thank Krishna Defence and Allied Industries Limited team for giving the time we spent on this call and responding all the queries in the detailed way. I would also like to thank all the participants for joining this call. Now I would like to hand over the call to the moderator.
Thank you. Ladies and gentlemen, on behalf of Hem Securities, that concludes this conference. Thank you for joining us. You may now disconnect your lines.
Thank you very much. Thank you.
Thank you. Thanks a lot.